Would you like to learn? Are we finally going to see the altcoin collapse happening within the next 3 months? All of that and more coming up in today's episode here with me, the Suppoman, your superhero of 100 to 1000 X gems. We're on the right trajectory down. We have been seeing over-exaggerated bullishness. You know, people saying bear market's over, yada, yada, yada. Bitcoin to 40k, Bitcoin to 50k in like 2 weeks. No, don't be stupid. But we're on the right track. Volume is going down, etc. But it's not just that. It's everything else associated with the market as well. We can see right now the Dow Jones, look at that, it's absolutely been decimated. As has the S&P 500, look at that today. And the dollar is certainly on the up since the beginning of February. In the macro field, we are starting to see the beginnings of potential turmoil. In between September through to this month, we were seeing some dramatic drops in the inflation rate. The inflation rate is really what has globally put this world into turmoil, because everything's gotten more expensive, wages hasn't increased, and people are finding it hard to afford things. Interest rates go up as a result of said inflation. 75 basis points, we're not making much of a dent. 8.3, then 8.2, then 7.7, and then it went 7.7 to 7.1 to 6.5. That was 0.6, 0.6. They were two big chunks out of the inflation rate. And then this month, 6.4. 6.5 to 6.4. We are back into this period like we had in August, September time. 0.1%. It shows a slowdown and a potential reversal. So this is the first thing in the macro market that is giving cause for concern. Next, we have the PCE. The PCE is another read of the inflation rate, but the PCE versus the CPI is what the Fed actually looks at in order to determine the Fed funds rate. How much should they add in terms of basis points? So the previous month was 4.6% headline inflation. The forecast for this month was 4.3%, and the actual was 4.7%. So this has reversed. So instead of coming down as it was, it's actually starting to go back up. And there is 25%, near 25% chance of a 50 basis point hike and a 76% chance of a 25 basis point hike. So at this present time, this is a lot more than what was expected last month. So there is an expectation things are going to take a turn for the worse. Second up, we've got this, okay? This was a beauty of a video.
Closer to a recession in the coming months, and that October low, not really the low. Let's bring in Canaccord Genuity's chief market strategist, Tony Dwyer. Tony, great to see you. So what kind of low are you bracing for?
So why don't we just give it the data? So you open the show with how the 2-year note yields at the highest of the cycle. We look back since it's been at 500 stock index and since 1957, and the S&P 500 has never made the low of a cycle when it's down more than 19% before the 2-year made its peak. So with the 2-year making the peak of the cycle so far, that tells you that October low wasn't the low.
So what he's saying is, since 1957, looking at the US 2-year Treasury note, when the US 2-year Treasury peaks, you are likely to see a bottom after that. US Treasury peaked at the beginning of November, and that was when we had a crypto low anyway. We saw that crypto went to 15.5. What he's saying is since 1957, whenever the peak has been, there's always been a bottom that comes after. What's happened is that back here on the 2nd of November, we had a 2-year Treasury percentage of 4.72. We have, in the last week, hit 4.8. So we have actually peaked higher than in November. Meaning what? A new bottom's coming. So the bottom is not in. Now, what he has been saying is that the US is going to be going into a recession.
Do you have any sense of like when stock market in a bear market usually bottom in and around a recession? Because again, you know, this recession call by a lot of strategists and some investors too has been pushed out a little bit. You know, a lot of people were saying just a couple weeks ago, we're in a new bull market and the bear's over. So I'm just curious, if you're right about the recession, maybe in the back half of 2023, how do the stock markets usually bottom before recessions or in them?
Dan, it's a great question. They've never bottomed before a recession. So the median number of weeks from the beginning of the recession to the S&P 500 low is 23.5 weeks.
Very, very important phrase that he just said there. It has never bottomed before a recession. So people that say, oh, it's priced in before a recession. When a recession is announced, it's already bottomed 6 months. No, it hasn't, right? A recession hasn't been announced. And never in the history has there been a bottom prior to the recession. So once a recession is announced, which it looks like it's getting more and more likely, particularly with the 2-year treasury going up and up and up, then the likelihood is that we are going to be heading into a recession. And if we hit a recession, the bottom will come after it's been announced. Okay, so this is what I've been saying basically now for 8 months. Yeah, I've been saying that the recession causes the bottom. Bottom doesn't come before a recession has been announced. So, 2 key points. Number 1, the US 2-year treasury has peaked at a higher percentage than in November. And in the 57-year history that they've been tracking the US Treasury note, a more significant dump comes after a new peak has been achieved. A new peak has been achieved. So that's point number 1. That means the bottom hasn't been hit yet. Number 2 is once a recession is announced, that is when the bottom is likely to happen post the recession being announced. And I showed you actual evidence in 2008 that the recession was announced in November 2008, and the actual bottom came the beginning of 2009. Therefore, we're not out of the woods, essentially. We're not out of the woods. So, as well as fortune's now taking a reversal, we had this bear market rally, which I've been maintaining all this time. We are getting back to being realistic. The glaze that we've been under, because the market's been going up, certain cryptocurrencies has been 10xing, even some cryptocurrency, even 200x'd. And now things are turning around, and everything that felt all bullish last month is now beginning to take a turn for the worse. Another thing I wanted to show you, obviously, is this. This is the wallets of whales, right? So this is the hodler account, okay? So these are the people that hold large amounts of cryptocurrency. And what happened in the 2018 bear market is that when the bottom was hit, these guys started buying, all right? Or actually, just before the bottom was hit, these guys started buying because they believed this was the time to start accumulating, right? They have not done that yet. They have not begun buying at all. They've only been selling. There has not been a spike up in activity this whole bear market. They have been progressively selling, and right now we are at the lowest in this whole bear market. With these big addresses with 1,000 bitcoins, they're continuing to sell. So we are seeing a massive difference in the bullishness. Like, it's not as aggressive as it was. Now it's a profit-taking time, and now we're probably going to start facing reality, as it were.